In recent years, a seismic shift has been taking place in the global manufacturing landscape, a trend that's quietly yet steadily changing the game. Big players in the manufacturing industry, giants like Hasbro, Mattel, and even Apple, are packing up their factories from China and setting up shop in India, and you might wonder why this sudden change of heart. The reasons are multifaceted. For one, increasing labor costs in China are becoming a concern for these corporations. The ongoing trade war adds another layer of complexity to the situation, but perhaps the most significant factor is India. The country is rapidly improving its infrastructure and rolling out favorable policies for manufacturers, making it an attractive destination for these industry titans. The shift from China to India is not just about geography or cost-cutting measures. It's a strategic move that reflects the changing dynamics of the global economy. But what does this shift mean for investors and businesses worldwide? India, once known for its IT services, is gradually becoming a manufacturing hub. How, you ask? The answer lies in an enticing mix of factors. First off, India boasts a thriving labor force that is not only large, over 500 million strong, but also young, with most of its workers under the age of 35. This, coupled with lower manufacturing costs, makes it an attractive alternative to China. There's also been a significant improvement in India's business environment. The World Bank's Ease of Doing Business ranking has seen India jump from 134th in 2014 to 63rd in 2020. And let's not forget the Make in India initiative. Launched in 2014, it aims to transform India into a global manufacturing hub, attracting billions of dollars in investment and creating millions of jobs. Indeed, India's manufacturing potential is gaining global recognition. This shift isn't just transforming the manufacturing sector, but is also reshaping the global economic landscape. As companies like Hasbro, Mattel, and Apple shift their operations to India, the economic implications are profound. Over the last 5 years, we've seen a surge in investment in India, with billions of dollars pouring into the country's manufacturing sector. This influx of capital is not only boosting India's economy, but also creating a ripple effect across the globe. On the flip side, China's economy is feeling the impact. With manufacturing facilities moving out, there's a decrease in foreign investment. This shift is also disrupting the global supply chain, as companies have to reconfigure their operations. The changes are not just limited to these two countries. As the world's factory moves from the East China Sea to the Indian Ocean, other economies tied to China's manufacturing might need to pivot and adapt. As the manufacturing pendulum swings towards India, the world watches in anticipation. For investors, this shift is opening up a world of opportunities. As manufacturing giants like Hasbro, Mattel, and Apple move their operations to India, there's a surge in the Indian economy that's hard to ignore. This economic uptick is reflected in the performance of certain exchange-traded funds, or ETFs, available in the US stock market. Take the iShares MSCI India ETF, or INDA, for instance. It seeks to track the investment results of an index composed of Indian equities. Or consider the Wisdom Tree India Earnings Fund, also known as EPI, which focuses on companies incorporated and traded in India. Both these ETFs offer a promising avenue for those looking to capitalize on India's manufacturing boom. In the past few years, these ETFs have shown solid performance, and with the ongoing shift in manufacturing, their potential seems to be on the rise. Indeed, the shift to India is not just a trend, but a potential goldmine for savvy investors. As the world adjusts to this new manufacturing reality, one thing is clear: India is not just a contender, but poised to become a global manufacturing powerhouse. The country's strategic location, vast labor pool, and strengthening economic policies are all factors propelling it towards this future. Estimates predict that by 2030, India could account for over 20% of the world's manufacturing output. That's a staggering leap from its present share. This would place India at the forefront, rivaling long-standing manufacturing giants. And major players are taking note. Companies like Hasbro, Mattel, and Apple are already starting to shift their manufacturing bases to India. This move is not just about capitalizing on lower costs. It's about being part of a vibrant, growing economy that's set to redefine the global manufacturing landscape. The shift from China to India is more than a trend. It's a revolution, changing the face of global manufacturing as we know it.